Hey everybody, this is Greg Gossett from Gossett Trading and Mentoring Live, and today is Monday, October 14th, 2019. We're now in the first trading day of the week and the last trading day of the hour. And as I mention each day, I believe that the closing prices are the most valid prices of the day during the day. We have the algorithms and we have the day traders battling it out. In the last hour of the day, the large financial institutions, the market makers come into action and they start moving the prices towards the close where I believe they think they should be, where the most valid prices are. So that is why I make the majority of my trading decisions, my entries and my exits based upon the closing price, because I feel like it's the most valid price of the day. Plus, when you do it this way, it frees up your day. You don't have to sit in front of the computer all day. And all in all, I just think it's the best approach, at least for me. So anyway, I just want to make sure we're coming through okay. If you can hear me okay, if you wouldn't mind just saying hi in the chat, that way I know we're good. So it's kind of an up and down day today. Currently, the Dow is down 7 points, the Nasdaq is up 2 points, and the S&P is down 1.71 points. So pretty close to unchanged today after the big day that we had on Friday. So we'll see what the final hour brings here for us today. So I want to thank everybody for coming by. I do appreciate you coming each day and investing your time with me. I hope that this podcast is helping your trading, your understanding of trading, your understanding of investing, and I hope you're getting a return on your time investment. So, okay, it looks like we have a few people. So Kurt, hey buddy, how you doing? Kurt says all good. Looking forward to our lesson tonight, Kurt, and hope you're doing well. Hope you had a good weekend. Hey JT, what's going on, my friend? Always good to see you, JT. Thank you for coming by. John, good to see you, John. Hope you're doing well. And if you have any questions for me today, please let me know. And Jesse, hey buddy, what's going on? Jesse's our friend in Minnesota. He says, Lima Charlie, sir. Oh, great. I think that means loud and clear. LC. So, all right. So, well, listen, the plan for today, as usual, is first of all, we're going to go ahead and run the U.S. legal disclaimer. After that, we're going to come back. We're going to take a look at all my current positions. We're going to talk about when I bought them, why I bought them, and more importantly, how I'm going to manage them either to the upside or to the downside. After that, we're going to spend a few minutes and we're going to talk about trader psychology. I like to repeat this every day, but getting control of your emotions is the most important skill that you will have in trading, whether you're dealing with a string of wins or a string of losses or a lot of choppy market action. It can wear on you and it can start turning up those emotions where either you're euphoric or depressed or frustrated. And that is the danger zone for a trader when they feel either of those three, depressed, euphoric, or frustrated, where they may make a bad trade that really might destabilize them even more and have a negative impact on their account. So it's always important, everybody, to stay right in the middle, stay in that value zone, keep your emotions in check. And, going forward as a trader, you're either going to learn to keep those emotions in check and stay in the game and become a better trader, or the emotions are going to get the best of you and you're going to make a bad trade or maybe not get out, position size too large because you were frustrated or euphoric or depressed about the market. Or you may not take, just like I was mentioning with Jesse last night, after you've had a string of losses, and if you position size incorrectly, you're frustrated, you may not want to take that next trade, and that next trade may be the one that really takes off for you. So anyway, we're going to do a few minutes on trader psychology. After that, we're going to go through all the stocks on my watch list. We're going to go down through each one by one. We're going to look at support, resistance levels. We're going to look for some type of possible setup. And for setups, I like to see a confluence, or I like to see a combination of indicators. I look at indicators like RSI and MACD and ATR channels and moving averages. I look at them as potential groups of buyers. So, if you want a stock to go up, it's important that you're in the company of other buyers. And if you can get a confluence of signals or a confluence of indicators coming together, you're much more likely to have more buyers, different groups of buyers. And again, if you want a stock to go up, you need to have buyers, and the more buyers, the better. And therefore, the more combinations or confluence of indicators lining at the same time, the better. So we're going to go down through, we're going to look for that at the end of the day. I mean, as we go down through, I'll check off a few potentials for the end of the day. And then as we get closer to the close, we'll go through those different candidates with a fine-tooth comb. And we'll take the best of the best if there is something to take. And we've also, we have to consider correlation too, right? I mean, we may find a really great trade, but, do we already have a position in that same industry? And we'll have to take that all into account. So, and then after that, after the market closes, if you have any questions whatsoever, please feel free to type a question into the chat. If you're not clear about something that I discussed today, just let me know and I'll do my best to clarify it. If you'd like me to take a look at any particular stock symbols, I'm very happy to do that at the end of the day as well. And, if you have a potential stock before the market closes that you think might be of interest to the group, please feel free, put it in the chat, maybe put a little star by it or something so I know it's one that needs kind of immediate attention, and if we have time we'll look at that. So that is the plan for today. So if you don't mind, please hold tight. I'm going to run the US legal disclaimer and I will be back in about 40 seconds. Thank you. This video or live broadcast, like all instructional materials produced by Gossett Trading and Mentoring LLC, is created and published for informational and educational purposes only. Please carefully read and/or listen to the U.S. government required disclaimer before watching this video or live stream broadcast. The video link and disclaimer text are located in the description section of this video or live broadcast, here and here. Thank you so much. All right. Excuse me, we got that out of the way. So, hey, Anthony's here. What's going on, my friend? That's our friend Anthony from New York. He says, hey, all, checking in from New York. All right, great. Hope everything's going well for you, Anthony. So, all right, well, let's get to it. And first of all, we're going to go through, talk about my current positions, when I bought them, why I bought them, how I'm going to manage them moving forward. Okay, so I did buy Boeing on Friday. At 375.09. I bought it because we had this higher low V2. Here is day one. Day two washes out day one. Day three on Friday closed above day one. That gives me a valid V2. It also rejected the -1 HER channel, which I like, and it is a higher low V1, V2, which is also better. So started out good today. You can see we did hit one profit up here at 378.02, right near the top. But that was earlier in the day, and it has come down ever since. So my initial stop on this trade is going to be halfway of the washout bar, about 372.30. As it is right here, right now, I am going to continue to hold this. Going forward, if it keeps moving up, I will continue to phase out. But tomorrow, if it closes below 372.30, which is the halfway of the washout bar, the day two washout bar, I will go ahead and just get out. But, I am grateful that I hit one profit target up here. So, this is, the market can't take that away from me. I already locked that in. So, that's one of the reasons why I really do like to phase. If going forward, if it comes back down, well, we took some off here at a profitable level, and it also makes, if we do have to stop out, it would make that loss smaller, right? It would mitigate that loss because we phased out here. So anyways, the pattern is still intact. I mean, I don't like that it went up so high and came back down. That's not a great sign, but it hasn't triggered my initial profit target yet. So that's the plan. I'll stick with the plan, and tomorrow, if we get a close below 372.30, I will go ahead and get out. Kurt says, "Hey Greg, great interview on Alpha Mind." Oh, thank you, Kurt. I appreciate that. You know how it is when you listen to yourself speak, and like it's always kind of cringy. So I was listening to it, and I was kind of cringing just because of the sound of my own voice. But I guess that's normal. By the way, I'm putting in a link to the podcast there. So if you guys are interested and you want learn a little bit more about my trading career and how I got into trading and some of the challenges I had and whatever, there is the link. So if you want to go and listen, it's about an hour long, and I've heard from people that it's pretty good. So I hope it's good. I hope it's good. So it was great being on there, and I appreciate the guys at Alpha Mind having me on as a guest. And I hope you guys will find some kind of wisdom or something helpful in that podcast. But thanks, Kurt. Appreciate it, bud. All right. So next is Etsy. So we did buy Etsy back here on the 9th of October. We bought it for two reasons. Reason number one is we had this higher low V2. Here is day one. Here is day two. Here is day three. Day two washes out day one. Day three closes above day one, making this a valid higher low V2 in the value zone. On top of that, the same day that we bought, on the 9th, we had a 1050 SMA crossover, which is a really good back-tested approach to trading Etsy. So, you know, I was speaking at the beginning of the podcast about having a confluence of signals. The more signals you have, the better, and that's what happened. So, you know, on the 9th, we had the 1050 crossover. That is one buy signal, and then the very same day, we had the higher low V2, which day two washed out day one, day three closed above. We closed above all the moving averages, or not all of them, but the 5, the 10, and the 20. We closed above 50, and MACD went positive. So, you know, a lot of signals there. Friday, we phased out, I think, of a couple profit targets. Today, it is down slightly. You know, I have moved one ATR away from my entry. So at this point, it kicks into discretionary mode. So today, if we close below Friday's close, which is 58.75, I will go ahead and just lock in the profit for a nice gain, right? And like I said, Friday, we hit some profit targets right up here at the very, very top. So no profit targets today, but if it does close below 58.75, I will lock it in because we moved one ATR away from my entry. So, you know, when I take a trade like a V1, V2, my initial stop is going to be here of the halfway of the bar, halfway of the washout bar. That's my initial stop. But as we start moving up, and my rule is that if we go up at least one ATR from my entry, then I start tightening up my stops, right? And so my stop here now would be a close below previous day's low. You can see intraday, we already did go below and test it. There were no more sellers down there, and we reversed back up. So as long as it holds above yesterday's low of 58.75, I will continue to hold this, but this has been a good trade so far. All right, next trade are the Qs. I did buy this on Friday, the October 11th. I bought this because we have a 520 EMA cross. This is a good back-tested, long-term back-tested, quantified, profitable approach to trading the Qs. When the 5 EMA crosses over the 20 EMA and the price at the close of the day, if you get a closing price with the 5 crossing over the 20, I would go ahead and buy it, and I did buy it here at 191.11. We're up slightly. It's at 191.35. This is a completely mechanical trade. This is a robot trade. So there's no discretion involved in this trade. I like to I like to trade different methods, some discretionary, some mechanical, because sometimes if you're just trading discretionarily, you might get a day or two of bad price action against you. And it will get you out, and then, you know, the market may move big in your original direction, but you won't have any chance to get back in. So that's why I like trading ETFs like the Qs and the SPYs and the DDMs on a completely mechanical basis. And, you know, the only caveat is that, you know, if you're trading the Qs completely mechanically, you would buy it when the 5 crossed over the 20. You would stay in it just as forever until the 5 crossed back below the 20. I put a little my own twist on that, and I do stick with that plan, but I also phase out to the upside, which is just more comfortable for me. So anyway, you can see the 3 profit targets we have here today have not hit any of those. You know, you can see when the 5 crossed over the 20, we were still in the value zone. If it would have closed up here, I would have hold my nose and bought it. But you know, if we're up near the second ATR channel, I probably would just not take the trade, because, you know, I mentioned this a lot, but the easiest moves come from the negative third ATR channel up to the positive third ATR channel. 90% of prices fail near the third ATR channel. 90% of prices, when they get down to the negative third ATR channel, bounce. So the closer you get to that third ATR channel, statistically, the least likely it's going to have more room to move. So I like buying down here to go up there, right? Or if I'm shorting up here, to go down here. But once the price starts getting closer here, I really don't take a lot of entries. And therefore, that's why if the 520, if the price when the 520 crossed was closer to this 2, I just would have gone ahead and not taken the trade. But it did close in the value zone, so that's kind of the filter I take for crossovers. So far so good. Up slightly. MACD did go positive as well on the day that we bought it, so that was also a good contributing factor. 520 EMA crossover with the MACD. Again, this is mechanical. I'll trade this just as long as it keeps moving up. I'll phase out until I'm literally out of shares, or the 5 crosses back below the 20. But I'm glad I have a mechanical trade on. Have not had one on for about a week or so. Next one. Okay, the all famous SPY trade. All right, so, oh boy, my pictures disappeared. What happened? Sorry, give me a second. That's interesting. Sorry, everybody. I don't... Oh, there it is. All right. There's that one. And... Sorry. I'm all mixed up here. Okay, sorry. All right, let me get that taken care of. Sometimes my graphics disappear for no reason. All right, here we go. All right, so the SPY trade, I do buy the SPY every single day at the close of the market. I buy it every day regardless of the technicals. And you might say, Greg, you know, you trade technically, why do you do this? Well, this is based upon a back test from Lizanne Saunders at Bespoke Invest. I believe she's the chief investment officer at Charles Schwab. But in this test, they did it 2 ways. The first way, you buy the SPY every day at the open in the morning. You sell it every day at the close. Now, if you did this every day since 1993, you would have actually returned a negative 13.9%. However, if you did the opposite, which is what I do every afternoon, I buy the SPY at the close. I sell it first thing the next morning at the open. So I buy at the close, sell at the open, buy at the close, sell at the open. If you use this approach, which is what I do, instead of returning 13.9%, a negative 13.9%, you would have returned a positive 634.2%. So there's a huge difference compared to buying at the open, selling at the close, or buying at the close, selling at the open. One's a negative 13.9. and the other is a positive 634.2%. So past performance is no guarantee of future results. That's true. That, of course, goes with any approach to trading. But really what this means, everybody, is that all the gains in the stock market in the S&P 500 since 1993 have not come intraday. They have come from people bidding the price up after hours and in the pre-market session. So, it's pretty interesting when you think about that all the gains from 1993 have come in the after hours in the pre-market, not during the regular market. So with that said, it has had good results, and you can see the blue line is the buy in the afternoon, sell in the morning. The orange line is the buy in the morning, sell in the afternoon. You can see it's not even close. The buy in the afternoon, sell in the morning has done very well, and the buy in the morning, sell in the afternoon has not done well. It's been a negative. I really like this chart. It shows you what, if you have an edge, what your equity graph can look like. Doesn't go straight up, but over time, if you have an edge, you keep repeating the trades, you can gain the benefits from it. In between, you have ups and downs. This is totally normal. It doesn't mean there's anything wrong with the approach. It just means that it's just normal distribution, normal wins, normal losses. So, but in the long run, if you can stay with it, position size correctly so that you can stay with it. Imagine if you started here and you loaded the boat up, you'd have 2 years and you'd like, this is the worst approach. Right? So with any approach, I want to use a small position size. 10% is the max position size that I will use, because I know there's going to be ups and downs, and just because it's not working at the moment doesn't mean it's not going to work in the long term. But the way to circumvent that is to use a very small position size, so that if you do run into a big string of losses, it's not going to stabilize you. So anyway, with that said, I did buy the S&P on Friday at 296.28. Sold it this morning for a small loss, 295.90. So looks like it was a 38-cent loss, but that's how it goes. In the month of May, using this approach, I think I lost 80% of my trades overnight, right? And if you would have started in May, you would have thought, man, this is the worst approach ever. However, I have been using this since February 26th, and since February 26th, it's been really profitable. As a matter of fact, hit an all-time high using this approach with the big move up on Friday morning when we had the big when we had the news about the possible China trade deal. So had a great trade there. Bought here somewhere around 293 and sold it up here at 296. So small loss today. That's how it goes. But I will be buying this again today at the end of the market as per usual. So that is it. So just a real quick recap. Boeing bought the higher low V2, did hit one profit target today, is down now today. If it closes below 372.30 on a closing basis, I will go ahead and take a small loss. Etsy bought that higher low V2 back on the 9th. We phased out, had a nice day on Friday. Today, if it closes under 58.75, which is Friday's low, I will go ahead and get out. The Qs, we bought the 520 mechanical crossover. That's moving up, so that's good. And MACD went positive. And then, of course, SPY, I will be buying that again at the end of the day. So that is that. Let's come over here. Let's see. Hey, Steve Burns, how you doing, bud? Thank you, Steve, for coming. It's always an honor and a pleasure to have you here. If you guys don't know who Steve Burns is, man, I'll tell you what, he's made a huge difference in my life. He's a great author. He's a great teacher. He's a great mentor. And it's always great to have you here, Steve. It's always an honor. And this little bit I'm going to do on trader psychology actually is a quote from Steve Burns. So how about that? That's good timing. So we're gonna talk some Steve Burns here. And Bing He, how you doing? Good to see you, my friend. Bing He is our friend from Singapore. So I hope you're having a good evening or early morning over there. So let's take a look here. Give me 1 second. All right. So listen, this is the time of the day where I like to talk a little bit about trader psychology. You know, there's some really good there's some really good channels on Twitter that I like to follow with traders and traders that like to specialize in posting really good bits of information about trader psychology, trading words of wisdom, if you will. And so I like to scour Twitter. I like to look for something that resonates with me, something that I think would be helpful for the group. But this comes from Akil Stokes, who is one of those people that have a great channel. And so if you have not subscribed to Akil Stokes, it's at Akil Stokes RTM on Twitter. But he always puts out good information on trading psychology. And, you know, as you guys know, I think it's the most important skill that you can learn and the most important skill that you can master. So, you know, subscribe to his channel, read his posts, and I think they will help you. They really will help you. But Akil says, too many traders, excuse me, this is from Akil, but this is a quote from Stephen Burns, our friend Stephen Burns, who's on here with us today. But Steve, by the way, is at @SJosephBurns on Twitter. But Steve says, too many great traders get caught up focusing on the small picture, whether it's having a great day or a bad day. The truth is, consistent positive habits are more important than results, because that is what will lead you to the long-term goal that you desire, right? And isn't that true? One day does not make a trading career, guys. The best traders in the world have horrible days. There's no doubt about it. They have horrible weeks. Sometimes they have horrible months, but it doesn't mean you're not a good trader if you don't have green on your screen. So I mean, what Steve's saying here, you know, having consistent positive habits, writing your trades down, taking the proper position size, taking the trade when you're supposed to, not taking the trade when you're supposed to, but just, you know, getting in a groove, having a process that you just follow every day, really is what will lead you to the long-term results that you desire. And so down here underneath, and this is from Steve Burns, you can have a losing day but a profitable week. You can have a losing week, but a profitable month. You can have a losing month, but a profitable year. You can blow up a small account, then build a big one. Play the long game. And it's so true, everybody. That's why I always talk about playing the long game in trading. Take the long view. Everybody understands what long-term investing is, but I don't hear that term thrown around much when it comes to trading. Trading's just like, you know, 0 to 100, bam, 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 right? It's not like that. You know, think of it as the long term. Think of it as trading for the long term. Each trade is just one of the next 1,000 trades. Any one particular trade doesn't mean anything. Any losing day doesn't mean anything. Any losing week doesn't mean anything. And actually, any losing month doesn't mean everything, right? So it's important, guys. Take the long view. Take the long view. Don't get down if you have a losing week or a losing month or a losing day. You know, trade like you're supposed to. Have a consistent plan. Like he says here, the truth is, consistent positive habits are more important than results, because that is what will lead you to the long-term goal you desire. And I think the key word there that Steve is saying is habits. They have to become habits. Making good trades, making good decisions, becoming a habit. The more you do it, the more habit you're going to have. So thank you very much to Akil Stokes, and thank you very much to Stephen Burns. So anyway, I saw that, Steve, and I thought, oh, that's really good. I want to mention that. So anyway, I hope that helps everybody. Steve says Akil's a great guy. Yes, he is. He has really good information on his channel. He does a little video, you know, a few minutes talking kind of basically what we're just doing here, right? So yeah, definitely go and subscribe to Akil on Twitter. And so let's see, Murat, hey buddy, how you doing? I got your email. I responded. Hope you got that. Hope you're doing well. Hope you're having a good night in Norway. Murat's our friend from Norway. So all right, well, I think, let's see, how we doing here. All right, so the NASDAQ's barely up, Dow Jones is down, and this SPY is down slightly as well. All right. let's go ahead and go through the charts and see if we have anything for today. All right, so Apple is down 5 cents. On Friday, we went above the 70, closed below the 70. Today, we were above the 70. Currently, we're below the 70. I certainly can't buy up here if any of you have Apple. Great run that you guys have had, but of course, you know the way I trade, I really don't even like to buy above the 1 ATR channel. So this is much too high for me. It did close above the 3rd ATR channel, which is very strong, right? That's a good indication for long term. If it had rejected the 3rd and closed below, not so good. But the closing above the 3rd ATR channel is very bullish. However, again, the way I trade, the filters that I have, I really cannot buy Apple up here. What I would really be looking for on Apple is a return to value. I don't want to buy over value. I want to buy in value. Look for a V1, V2, and that's where I'd like to get long. Alternatively, possibly a bounce off the 50-day since we're so far extended, or even a 520 cross under and then back over, or maybe even down at the 30 RSI. You know, at this point up here, you'd think, oh, it's never going to 30 RSI, but you guys have been trading long enough, you know that you can have some big up moves that go real quick to big down moves. So, but first stop, I would be looking for Apple to return to value, look for a V1 or a V2. Adobe, nothing really here on Adobe. I might be interested if we can close below the 200-day moving average, close back above, look for some kind of V1, V2, close above. MACD is positive, but really nothing here for me today. Alternatively, if it keeps moving up, I could look for a 1050 crossover. That would also be a good, valid, back-tested approach. So, you know, we did make a higher low here, no V2, but, you know, if we move down a couple days, still being in the value zone, had another higher low V1, V2 here, I might be interested in that, especially with the MACD being positive. All right, well, Advanced Micro Devices having a big day, up 2.49% here. Really nothing interesting for me. Looks like we're going to close above the 1 ATR channel. As soon as we close above the 1 ATR channel, you know, I want to see a return to value, right? Because now it is overvalued the way that I look at stocks. So I'm looking for a pullback into the value zone, some consolidation, a false breakout to the downside, and reversal. And that's where I would be interested in Advanced Micro Devices. Amazon. So Amazon is interesting to me here, guys, and I'll tell you why. You know, we made this low, we rallied. People that bought here most likely sold here as it started to weaken and moved back down. We made a higher low, but we didn't have a valid V1 or V2. Then we rallied for a couple days. We went into the value zone. Now we are in the value zone. Earlier today, you can see we washed out Friday's low by a substantial amount and have reversed. So this is a higher low V1 on Amazon. In addition to that, MACD has now gone positive, but you might say, Greg, it's at a 4502 RSI. That doesn't allow you a good risk to reward ratio. And yes, you're right. I mean, if we look at where the 50 RSI is going to be tomorrow, the 50 RSI would be here tomorrow. And if I were wrong, be halfway of the washout bar. This is the washout bar. So my risk theoretically would be from here to here. My reward would be from here to here. It is a 2-to-1. And I do like that it's a higher low V1 back into the value zone. I do like that MACD went positive today. It's been a long time since that's happened. And it's been a long time since we've closed above the 10 ATR channel. But it does look like currently at the moment we might close above the ATR channel. So if this is a valid V1 today at the end of the day, meaning today's close closes above Friday's close with this washout, that will be, in my opinion, a valid higher low V1. And I especially like the MACD crossover. Tomorrow, you know, if we did rally up, reject that 50 and close below, I would just go ahead and get out and call it a one-day trade. But if I'm wrong small, close below halfway the washout bar. So I do like Amazon today. Anthony says, let's get in the habit of hitting the like button for Greg. Thanks, buddy. I appreciate that. Thank you very much. Yeah, if you like the content, if it's helping, please hit the thumbs up. That's awesome of you. Thanks, Anthony. Steve says, lots of near 1050 crossovers, DDM, QLD, IWM, MA, and SPY. Yes, I saw that. And DDM is getting pretty close. So I'm going to show that one. Thanks, Steve. Appreciate that, my friend. But if Amazon does close today above Friday's low, that will be a higher low V1 with the MACD crossover. All right. Okay, Boeing, we bought Friday, did hit the one profit target, has reversed quite substantially, but as long as it holds above 372.30, I'll go ahead and keep it. Caterpillar, strong, has the 200-day moving average above. It's above the 1 ATR channel. MACD is positive, but it's a little too high for me to be buying here. DDM. So DDM is one of those charts. Trade Navigator should be completely fixed. However, if we look over on DDM, we have a good back-tested approach when the 10 EMA crosses over the 50 EMA on DDM, and I'll show you the back test real quick. This is the DDM when the 1050 EMA has a crossover. This is from 2000, January of 2000. And you can see this approach, the 1050 approach, did return 259.4%. Buy and hold was better at 320.9, but using the crossover, the drawdown was only 28.7, where the drawdown on buy and hold was 81.7. So it is a good back-tested approach. This is showing Friday's bar. However, what I do know, just because I've done the math on this, is that if DDM would have to close above 49.50 today for the 1050 EMA to happen. If it doesn't happen today, it might happen, tomorrow or the next day. Currently, we're at 49.06, so doesn't look like it's going to happen, but it might happen tomorrow, and then I would take another position in DDM, which is a double leverage Dow. This would be another mechanical approach, just like the Qs, the one I showed you earlier on the 520 on the Qs. Disney down today. We did make a low here with some deep MACD bars. We did rally. We painted some green. So my students like Kurt and Anthony and Jesse will know that if we get back down here, test this bottom, we probably will have a double bottom with the bullish divergence, which would be good. But nothing to do yet. I'm just looking into the future. And I know that if we got back down here, we would have more shallow MACD bars on this second move down, meaning the momentum was less. And, the implication is if you're running out of momentum, it might go the other way. So I think a really sweet spot on Disney would be somewhere down here in the low 30s. At the same time, we are at the 200-day moving average. Like I just said, we most likely would have a bullish MACD divergence. So that is really where I'm looking, somewhere in this range for Disney. I think that's going to be a sweet spot, but it's not quite there yet, right? I'm identifying this location as a group where I think other buyers are going to come in, might hold support here at the previous low. You have the 200-day moving average. You're going to have a most likely a double bottom with the bullish divergence and low 30s. So this is the area that I'm really waiting for, but nothing there yet. Etsy, of course, we bought that back on the 9th. Be watching this today at the end of the day. If it closes below 58.75, that will be my trailing stop, and I'll just go ahead and lock in the profits on the remaining shares that I have. All right. Ford Motor Company, nothing really there. We're back into the value zone. I needed to go up, come down a day or two, and look for a higher low V1, V2. Facebook is down slightly today. What I would be looking for on Facebook here would be 1050 crossover or a couple days pullback, looking for a higher low V1, V2 in the value zone. Five Below, nothing really going on here with Five Below. Gold is one I'm watching. A good quantified back-tested approach to trading gold is the 5 EMA crossing over the 20 EMA. We had a really big move on that, I don't know, it was a month ago, on this exact signal with the 5 crossing back over the 20, but it has to cross back over the 20. It's not there yet, right? So I really don't see any signals here on gold yet. Google up slightly today. What I'm looking for on Google is I'm looking for a 1030 SMA crossover. The pink line is the 10, the gray line is the 30. So in order for me to get interested in Google, I have to have the 10 cross over the 30 on a closing basis. And it can't be too high in the channels, right? Like from the 1 to the 1.5 is about the max. So nothing yet on Google, but we'll look and see where the price is when the 10 eventually crosses over the 50 in the future. 10 crosses over the 30 in the future. Goldman Sachs is up today. It had this nice bounce off the 200-day moving average. It was down earlier, had a little bit of a V1, but didn't wash out very well. We're above the 50 RSI, which is positive. MACD is threatening to cross over here. Threatening in a good way, but really nothing here. What I'd be looking for on Goldman Sachs now that we're back into the value zone would be a valid higher low V1, V2. This is a V1 for sure, and it is a higher low one, but it didn't wash out very much. So anyway, it might just keep on moving, and if it does, the 520 EMA crossover is a good crossover on Goldman Sachs. IBB. Really nothing here on IBB at the moment. The 5 crossing over the 20 is a good back-tested approach. Or we went from red to green on the MACD. If we come back down, test this bottom, this would also be another good indication or a good place for me to be interested, because at that point we would have a double bottom with a bullish divergence. Intel Friday closed above the closed above the 1 ATR channel, made a new high. I would be looking for Intel to come back into the value zone, which it is, but I need it to come down into the value zone. I need it to stop going down. I need it to start moving sideways and then look for a V1 or a V2 entry. Russell 2000 rejected the 200-day on Friday. Good backtest approach on trading IWM is the 1050 SMA crossover. So I'll be waiting for the 10 to cross over the 50, and that would be a potential entry point, depending where the prices happen. Now, you can see the 10 did cross above the 50 back here on September 16th, but you can see, remember I said I really don't like to buy over the second ATR. Like I don't even really like to buy over the 1.5 ATR. This happened way up here over the third ATR channel. So that was way too high for me. And as it turns out, you can see that was a good move. I didn't take the trade, even though I like to take this trade, but I didn't take it because it was just too high. And it would have been a miserable trade that I did. So I really do look at where the price is in relationships to the ATR channels before I buy, even if it's a good back-tested approach. Johnson & Johnson, nothing really here on J&J today. Coca-Cola continuing down. I would be looking for some kind of higher low V1, V2 that closes back into the value zone, but there's really nothing there. Conversely, we could see how it reacts around the 100-day moving average. If we could get down to like a 30 RSI and a 100-day combination or confluence, that would be a good risk to reward ratio. Possibly look at a dip down to the third ATR channel, or possibly down at the 200. But anyway, nothing on Coca-Cola today. Lockheed Martin Friday had that big gap up, big reversal bar day, so really nothing on Lockheed Martin. Steve just mentioned the 1050 EMA crossover on MasterCard. Currently the 10 is at 272.82. The 50 is at 272.86. So that is a good back-tested approach. Not quite there yet. 272.82, 272.87. I'm gonna quickly do some math here. In case that does cross over, I would possibly be interested in taking that today if it crosses over, but we'll have to see. We'll have to see. So we'll mark that one. Altria has had a huge move, right? We're way over, we're way above the 1 ATR channel. I would need MO to come back into value, look for a V1, V2. Pretty simple. Merck, just a sloppy mess, nothing there. Microsoft up 2 cents today. Look for a move down, look for a higher low V1, V2. Netflix up again today. I was thinking about taking this, but I decided not to. I was looking for a pullback, never got it, and it kept moving. So nothing on Netflix. If waiting on Netflix, I'd like to see it return back into the value, move sideways, look for a V1, V2. Nike, another strong day today. 68.27 RSI, just too high for me. Philip Morris hanging out there right underneath the 200-day moving average, but I really can't get involved in Philip Morris up at these levels. I look for a pullback into value, V1, V2. PayPal, really nothing here. We actually took this on Thursday, hit 3 profit targets on Friday, but it rejected the 50 RSI, closed under. So that's why I decided just to go ahead and lock it in. MACD crossover. So that is positive. So nothing currently on PayPal. Maybe a close under the 200 and back the 250 and back over the 250. I would look to re-enter because that's where I took the first trade. But that was a nice trade. Qs, of course, we have with the mechanical 520 crossover. The SPY, we're going to take the SPY trade again overnight tonight. Bonds really sold off after it hit the 3rd ATR channel. This is a good example of why I don't like to take entries near the 3rd ATR channel, because about 90% of the time they fail, and this failed. So we closed under the 1 ATR channel, rallying back in. If we could get a pullback for a day or two and a higher low V1, V2, I would be interested there, but nothing today. Tesla, look at this, guys. Big day, up 3.52% today. This is a monster. Closed above the 200-day. Is that positive? Yes, it is. But you have to look at it in the context of where it is in the ATR channels. And we're right up here at the 2nd ATR channel. So it doesn't offer a good risk to reward. So nothing for me on Tesla. Twitter. Not much going on Twitter. For me to really get interested in Twitter, I'd have to have a higher low V2, V1 or V2 in the value zone, or conversely, look for a low RSI down here. That would be my preference. UNH, down today. We did buy this back here. I believe it was on the 4th. We had this higher low V2, moved up nicely for us, hit a couple profit targets on Friday. Then it closed under the 50, so I did get out, and looks like that was a good idea. But nothing there today. Oil down 2%. Nothing really on oil. I'd look for a dip to the 30. VIX. This is, to me, this is getting interesting, guys, because here we have a low. Right here we have a low with deep MACD bars. We had a rally, we went green. Now we're coming back close to challenging that previous low. Look how small the MACD bars are to the downside. This is, if we, not right now, but if we got down here to equal this low, we would have a double bottom with the bullish MACD divergence, right? And just because you have that doesn't mean you buy. You need some kind of entry trigger. But if we could come back down here, have this beautiful double bottom with the bullish divergence, look for a V1 or a V2 or under 30 back over 30, I'd like it. I would like it. And, it's possible that we should hold some support here. We bought back here last time and had this beautiful trade. So nothing on VIX today, but we'll keep watching it. Verizon, nothing really on Verizon. Walmart, Friday we broke out to a new range. Today we closed under, so we have a double top with a bearish divergence. Here's the previous high with these high bars. Here we make a higher high with very low bars. We have an RSI divergence, meaning that over here we were almost to the third ATR channel. Here we go higher, but we're only to the second ATR channel. So this is considered a false breakout to the upside. It really is. So I'm not going to short this into the value zone, but you know, this is the type of setup that looks bearish, where you have a top, you have a dip, you have it make a higher high. This second move was on much less momentum than the first. That is bearish. So I'm not going to do anything with that, but that looks bearish to me. Energy, nothing there. I've been looking for a 30 RSI dip. Financials, nothing. Real estate moving sideways, nothing. Utilities have really come off here. Here we make a lower high. For us to get interested in V1, V2 after a lower high, we have to wash out that first low. It's exactly what we did today. So if we could move sideways for a couple days now, get a V1, V2, I would be very interested in buying that, but nothing today. And healthcare, it's holding above the 200, but we were above, below, above, below, above, below, above. So it's not really holding any meaning. The 200 is really not holding any meaning at the moment. So if we look back to our potentials here, Amazon still looks good with that higher low V2, gives me a decent risk to reward. I do like that MACD is positive. MasterCard, you're looking for the 1050 EMA crossover, and currently we are 1 penny under the crossover. So we'll have to watch that one. If they close equal, that would be valid. And then the Qs, oh, okay, we already have the Qs. So, all right, listen, if you could be so kind, give me about 30 seconds. Got to move the dog around. She knows it's that time, but I'll be right back. All right, so here we go. So what are we gonna do? What are we gonna do here? So Amazon, you know, I do like Amazon. It's a higher low V1. Like I said, we haven't closed above the 10-day moving average for a long time, so this does show something's different happening. MACD crossing over, and it's a higher low V1. So this doesn't look too bad. So we'll watch that at the end of the day and see if it will still trigger. It's going to have to close above Friday's close at 1731.92. MasterCard. Oh, now the 10 is over the 50. 272.91, 272.88. Let's quickly test that. MasterCard, 1050 EMA crossover, 929.4%. Buy and hold was much better, but still 924 is pretty good, but the drawdown was half. So that one does look decent to me. So gonna watch that. I want to compare that to the simple moving average and see how it is. 786. So you can see the simple compared to the exponential was better. I'm sorry, the exponential compared to the simple was better. And let's take a look at where that's happening. Okay, it's happening under the 1 ATR channel, which is better. So it's not too bad. And if we go over, the other one we were looking at was DDM, but that had to close at 49.50 in order to get that. So, you know, let's take a look here and see what we have. So Boeing still is holding. So as per the plan, I will keep this as long as it holds above 372.30. Etsy does look like it's going to close above our low at 58.7, or yes, Friday's low at 58.75. So as long as it does, I will keep that. Q's doing fine, and SPY we will be buying that at the end of the day. So the question here is, right now I've got Etsy and I've got the Qs. Both of those are technology. If I add Amazon, that is going to be another technology, which I think I'm going to be overweight in technology. So what I'm going to do is I am going to go ahead. I'd rather have Amazon than I would Etsy at this point. So what I'm going to go ahead and do is I'm going to lock in my profits on Etsy to free up some space for Amazon. So what I'm going to do is I'm going to go ahead, sell my Etsy right now. All right, what's going on Etsy here? Okay. So I'm going to take that off because it was not acting very well, and I do want to buy Amazon, but I can't have too much correlation, right? So I'm going to sell that to make room for Amazon. Hope that makes sense. And we'll just go ahead and lock in that profit. All right, how are we doing on time? 2 minutes, oh boy. Okay, so I'm out of Amazon. Let's take a quick look at MasterCard. 272.87, 282.85. So that does not look like it's going to work. So I'm going to pass on MasterCard. Amazon looks fine. So I am going to buy Amazon at the end of the day. And you can see the MasterCard 272.85 compared to 282.87. It's really close. So I'll put it in. And this is going to be one of those tough ones. Okay, we got 1 minute. Man, these are all close. All right. 272.88, 272.88. So as it is right now, it does look okay. Yep. All right. right, so I'm going to buy it there. And I am going to buy it there. Wow. Pretty good. I got it. I did get it. So I did exit Etsy to make room for Amazon. So Etsy is gone. That was a good trade. Thank you very much. Okay. Amazon, we got filled at 1376.46. So that's the new entry on Amazon because of the higher low V2. So Boeing, we hit the one profit target. It did hold above our stop. Q, barely down on the day. Okay, so that's our new entry on Amazon. BA, Q, SPY, we got filled at 295.95. Oh, we got a good fill on that. 295.95. And MasterCard. All right, so we've got some positions here. We've got some positions here. So we bought it today at 276.43. All right, so that one was not a great fill. 276.43. Okay, so just real quick recap. Amazon, higher low V1, MACD went positive. We got filled today at 1736.46. BA we bought on Friday at 375.09. Did hit one profit target earlier today. It is holding the halfway of the washout bar, the initial stop, so we're keeping that. MasterCard, we did get the crossover. They're exact, but that's valid. So we did buy this on the 1050 EMA cross. Qs, we did buy the 520 cross on Friday, so that one was barely down today. And then SPY, we did enter SPY today at 295.95. So yeah, we've got some positions here for sure. So you know, I've got 5 positions, maybe allows us to have 1 position in the future, but we're pretty loaded. We're pretty loaded up. Oh, all right, guys. Sorry, I haven't been able to get the comments, but let's take a look. But before I do, just real quick, do want to put in my quick little plug, let everybody know that I do offer private one-on-one coaching, mentoring, and teaching lessons in the evening time via Skype. So, you know, if you're interested, please reach out to me. I usually do a quick kind of like a double-sided interview. I interview you, you interview me, see if we're a fit for each other. But I do offer a course. It's 10 hours, 5 2-hour sessions. It's one-on-one. I think having the one-on-one courses makes a huge difference because I teach you the first part of the lesson, and I have you teach it back to me. I put you on the stop, and I really make you teach it back to me so that I know that you know it. But I've had really good success with my clients. I've turned some really losing traders into some really good winning traders. So I do think it's a good investment. I think you know, my students have been very happy with it. So if you're interested and you want to kind of have that first beginning one-on-one call just to get to know each other a little bit better. I just want to know more about you, how you got into trading, what your challenges have been, what your goals are, and and then I'll put together a lesson plan based upon that, your account and so forth. So anyway, I think it is a good investment, and it's one-on-one. And what I do here in the live stream, I hope is helpful. But I know the one-on-ones are more because it's more intense and it's more focused one-on-one. So if you're interested, send me an email, send me a message on Twitter, and we'll set up the free 30-minute phone call. And then if you like this podcast, if it's helpful, I really would appreciate it if you would hit the thumbs up button. It does help promote the channel out to more people. And there's a lot of people out there that need some good advice and, good teaching when it comes to trading. And, that's what I try to provide. So if you can hit the thumbs up button, I would appreciate it. Okay. End of plug. Let's see what everybody has to say today. IWM, those last two bottoms, are those considered two separate bottoms? If yes, how do you look at bullish bearish divergence in momentum? Will it be single bar since they are the same move? All right, well, let's take a look. Okay, those last two bottoms, are they considered separate bottoms? Murray, are you talking about these two bottoms? This bottom, rally, second bottom? Because yes, this is a double bottom with the divergence. You have a low with deep MACD bars. You have a rally, you do paint green, you have to paint green, then you come back down, you make an equal to or lower low, which we did with more shallow MACD bars, and this is definitely more shallow than this. So this right here, 100%, million%, is a beautiful double bottom with a bullish divergence. Now over here, this whole bottom is considered one bottom. We're going to need to rally into the green and then come back down, make an equal to or lower to bottom with lower red. So I hope that helps. But yes, this is one bottom. We're going to have to rally to get some green MACD bars for it to be valid, then come back down and test like we did over here. Red, we did get a little green. We came back down. We tested with less MACD bars, more shallow MACD bars. And you can see that was a good location. Oh, John, I'm sorry I didn't get to go. Gosh darn it. But let's look at them. I'm sorry. There are a lot of things there that were on the bubble and close today. So JO. Oh, coffee. Wouldn't you know it? This is one of those ones, John, where it's one day behind. Let me look at it over here. I apologize for this. Trade Navigator is supposed to have this done this week, and we won't have to deal with this anymore. My bad. So let me see. On Friday, we were at a 33.35 RSI. Today, we did gap up. We did get rejected by the... Actually, let me move this over here. But I can tell you at the very least, no, it was nothing for today. But let's look at it a little bit closer. Okay, so you can see we did gap up today on JO. It didn't go under. I don't know if it went under 30, back over 30. This closed at a 33, so it may have gone under 30, over 30. That would have been the day to buy it, John. If it went under 30, over 30, that would have been the day to buy it. But today, no. People that bought it here, they're going to be looking for some weakness. What I'd like to see on JO is I'd like to see it move into the value zone, have a day or two down, look for a higher low V1 or V2, or conversely, keep moving up, painting some green MACD bars, and then coming back down, testing that bottom with the bullish double bottom with the bullish divergence. But at the very least, I'd like to see it move into the value zone, have some weakness, come down for a day or two, and then a higher low V1 or V2. And JJOFF? JJOFF? I don't have that one available, John. Maybe you could look one more time at that and see if that's correct. Yeah, I don't have that one available on my chart. Sorry, bud. Murat says, I shorted oil on Friday and closed today. I just didn't follow my plan. I fixed the stop, target, and all. In the middle of the day, I just happened to look at the screen and oil was dropping crazy. I said, okay, leave the plan, just take the profit. Then it continued move to my target, and it just met and overperformed a bit. So I realized only 50% of the potential gain. Yeah, well, listen, on the bright side, you had a gain, so I'm glad to hear that. But you know, the only time you're ever really going to think super clearly in trading is before you put the trade on. That's when you hit that buy button and then you have the trade, all of a sudden you don't look at it as objectively. So I think you make the best plans in the quiet when you're objective before you have the trade. So if your analysis was, this is what my plan is before you put on the trade, my advice would be to stick with your initial plan, because it was probably developed and thought of in the most peaceful and the most balanced and the best time. So lesson of the day, have a good plan, stick to it. That's right, Murat. That's right. Bing He says, just cut loss for OC. All right. That's correct. Close below the previous day's close. That's good. That's good, Bing He. I know this was a tough one. You got almost to your profit target. I know that's frustrating, but take some consolation in the fact that this was I believe it was still a positive trade, right? I think you bought it here somewhere, 60, 70, something like that. So remember, in trading, you can have big wins, small wins, scratch trades or break-even trades or small losses. And this fell into that group. It wasn't a big win. No. Was it a small win? I think it was a small win. Even if it had been a small loss, it would have been okay. You just have to stay away from those big losers. Big losers are the ones that are really going to mess up your account, you'll find, in the long run. So congratulations, Bing He. And like I said, even if you take a trade and it's a loss, pat yourself on the back that you followed your plan, because the more you do that, the more you're going to follow the plan. In the long run, it's going to work out better for you. Murat says, Amazon looks very good for long term as well. It may just go to 2,700 in a year, which is about 60% return. 2,700, wow. So the high was 2050. It might get there. If we can break above this high, we might take this distance to that distance to that distance, would put it, 27, 28. You're right. Good analysis. So I did buy Amazon with this higher low V2. We'll see what happens. Okay, so Murat says the recent ones. Yeah, there's no double bottom here. There's no double bottom with the bullish divergence. In order to have a bullish divergence, Murat, you have to have red MACD, then you have to, the very least, have some positive green before coming back down. So this is just one big clump of red. So in order to look for double bottoms, we'd have to have this move up, paint some green, then come back down. So I hope that helps. Bing He says, add commission is a loss. Yeah, I know you've got those high commissions. Yeah. Ex-dividend on OC was last Friday. How you doing, JT? Oh yeah. So being he, you should have got some dividends as well. So I think that should help overcome some of the loss. So hopefully, maybe it was break even. Who knows, right? Because you got the dividend on Friday, so you got paid the dividend today, or you will have it coming. All right, so slightly down day today, not too bad. We had a great day on Friday, so that's good. Um, so listen, if you guys have any other questions, please let me know. I'm happy to answer them. Otherwise, I'm going to get out here. I'm going to go for a hike. It's a beautiful day here. And I have a lesson with Kurt tonight, so I'm looking forward to that. And we're going to talk about phasing out, position sizing, all that fun kind of stuff. So I'm looking forward to that, Kurt. And like I said, in case you guys are interested in listening to that podcast, I did put it up there higher in the chat to Alpha Mind. But he has a great Stephen Goldstein and Mark have a great podcast. They interview some really good traders. I listen to other traders all the time, and I think you get something out of that. So let me see real quick. Murat says, JT said 22-cent dividend payable November 4th. Okay, good. For Bing He. Murat, my commission is very high as well. I think it is good to have a high commission since it focuses me to think twice before I put on an order. Buying a stock in the U.S. it cost me $15 each way. Wow, that's a really good point, Murat. And Bing He, think about what Murat just said. He goes, my commissions are very high. I think it is good to have a high commission because it forces me to think twice about putting on an order. So you're going to be more selective with your orders if you know you have a high commission. I've actually never heard that, Murat, so thank you very much for that. I think that is valuable advice, and yes, in a strange way, I think that really could be a good thing because it's going to make you more picky in your trades, and you're not going to just take trades willy-nilly because it doesn't cost anything. That's great. Thanks, Jesse. Thanks, buddy. Appreciate it. Had a really good call last night. I think we did some good work, and Jesse is now a graduate of Gossett Trading. So Jesse, you were a great student. I think you did really, really well. I have no doubt you're going to do well with trading, but this is to Jesse, but everybody else. But listen, if you do private one-on-one lessons with me, once we're done with the lessons, doesn't mean it's over, right? After the lessons, you can always, schedule another call with me, send me email, write questions if you're not clear on something, and I'm there. It doesn't cost any more money either. I'm there. So it was a pleasure to get to know you, Jesse. Really hope we can stay in touch. Bing He says, thanks. I didn't notice the dividends, but yes, maybe break even. Good. All right, so Murat, thank you very much. Thank you for that really valuable input on your commissions. I never thought of it that way. That is a great way to think of it, and I think you're right. And Bing He, good to see you, sir. Hope you have a good day. Kurt, looking forward to the call tonight. Thanks for coming. Jesse, again, thanks, my friend. Really impressed. You were such a great client. I know you're going to do well. JT, good to see you, and hope you keep coming back. Hope you're doing well and your trading's going well. Let's see. And John, like I said, I did the JO, but I couldn't see the JOFF. So Maybe we can try again tomorrow, but I couldn't pull that up. But thank you for coming, John. Steve Burns, thank you, sir. Always an honor to have you here. I'm always excited to have you here. I know everyone else is, and thanks for everything you do. Anthony, thank you for talking about the likes, and I hope you're doing well. And did we miss anybody else? I think that is it. I think that is it. Oh, Jesse says, summa cum laude, the pleasure was mine. Okay, awesome. All right. All right, guys, have a good day. Go out and do something nice for somebody, right? We need more of that in this world. So just do a little something nice, a wave, a hi, a hold the door. We need this, you know. Society just seems so mean and nasty. We need a little something. So do it. Go out, do something nice. You'll feel better about it. Make somebody's day and make your day as well. So, all right, everybody, I'm going to get out of here. Thank you very much for coming by, and I hope to see you guys all tomorrow. Have a good rest of your day. Bye-bye now. U.S. government required disclaimer. Stock, options, futures, and forex trading is not appropriate for everyone. While there is a potential for large rewards, there is also a substantial risk of loss associated with trading. The material in this video or live broadcast is not geared towards any particular individual or to any particular financial situation and is not intended to meet the particular investment objectives of any viewer. This video or live broadcast, like all instructional materials produced by Gossett Trading and Mentoring LLC, is created and published for informational and educational purposes only. Any and all information contained in, implied, or referenced by this video or live broadcast is not to be construed as investment advice, and no representation is made that any individual or entity involved in production of this video or live broadcast is an investment or financial advisor or is registered or authorized to give any financial advice. We are publishers and educators only. Therefore, the various producers of this video or live broadcast will not accept liability for any loss or damage of any kind which may arise either directly or indirectly out of the use of any of this material, including any loss of profit. No representation is made that any account or investment will or is likely to achieve the profit or losses demonstrated. We recommend consultation with a licensed and qualified professional before making any investment decision. This video or live broadcast is not to be construed as an offer to buy or sell any security, financial instrument, or financial product of any kind. Notice is hereby given that any individual or entity involved in production of this video or live broadcast or their clients may have an interest in any security, financial instrument, or financial product mentioned or referenced. Any simulated or hypothetical performance result depicted does not represent actual trading and therefore may under or overcompensate for the impact of various market factors such as lack of liquidity. Thank you.